Welcome to Degens Journal, your go-to spot for zero-fluff crypto news made for serious degens. In case you missed any of our daily drops, these are the 5 biggest crypto stories from last week, the headlines that truly moved the market. Elon Musk's AI firm XAI is facing serious legal action not over AI, but for allegedly polluting neighborhoods with unlicensed gas turbines. President Trump just told Congress to pass the genius stablecoin bill as soon as possible, no delays, no add-ons. This could reshape the entire US crypto landscape. The SEC opened the floor for public comments on XRP and Solana ETFs, signaling that a multi-chain ETF era might finally be coming. Michael Saylor is back at it, hinting at another massive Bitcoin buy right as tensions escalate between Israel and Iran. And in a major move for stablecoins, USDC could soon be approved as collateral for regulated US futures markets. Let's break them down, one by one. This is Degens Journal, and you're all caught up now. Story 1. Elon's AI firm faces lawsuit over pollution. Elon Musk's AI venture, XAI, is under serious legal fire, and this time, it's got nothing to do with algorithms or robots. A 60-day legal notice has been issued against XAI over its Colossus data center in Memphis, Tennessee, the heart of Musk's AI operations. Why? Air pollution. According to the Southern Environmental Law Center, SELC, XAI installed and operated at least 35 gas-fired turbines on site without obtaining the required Clean Air Act permits. These aren't small generators, we're talking about industrial-scale turbines, pumping out dangerous pollutants like nitrogen oxides, linked to respiratory issues, formaldehyde, a known carcinogen, and all of this is happening in residential communities that are already dealing with environmental health burdens. What's worse, the turbines were allegedly brought in to bypass delays in getting access to the electrical grid. In other words, rather than wait for a grid connection, AI just fired up its own gas machines and hoped nobody would notice. But they did. The legal notice was filed on behalf of the NAACP, America's oldest civil rights group, raising serious questions about environmental justice and corporate accountability. If XAI is found to be in violation, it could face massive fines, operational shutdowns, and serious reputation damage, especially for a company branding itself as the future of clean artificial intelligence. For a firm building tools to shape humanity's next digital age, this is a very old-school kind of scandal. Will Elon Musk respond? And will this slow down the race to train super-intelligent AI models? This story is just heating up, and regulators are watching closely. Story 2. Trump says, "Pass that stablecoin bill fast." Something historic is happening in US politics, and it's happening fast. President Donald Trump has just made his most explicit and aggressive endorsement of crypto to date. And it's all about one bill, the Genius Act, short for Guiding and Establishing National Innovation for US Stablecoins. This proposed legislation sets clear national rules for stablecoins, the essential layer of crypto used for trading, payments, and DeFi infrastructure. It would create a federal framework that allows compliant stablecoins like USDC to flourish legally under US law. And here's the twist. The Senate already passed the bill. Now, Trump wants the House to approve it lightning fast. His exact words posted on Truth Social: "The Senate just passed an incredible bill that is going to make America the undisputed leader in digital assets. Get it to my desk as soon as possible. No delays. No add-ons." This is not just rhetoric. It's the first time a sitting US president has demanded crypto legislation be passed and signed immediately, and it marks a major shift in Washington's tone on digital assets. Why does this matter? Because stablecoins are the bridge between crypto and the real economy. They're already moving billions per day, and yet until now, the US had no clear legal framework to govern their use, leaving companies like Circle and Paxos operating in a gray zone. If passed, the Genius Act would define what a qualified stablecoin is, create licensing standards for issuers, assign oversight to federal banking regulators, and finally provide legal clarity for businesses and users alike. This could accelerate adoption of dollar-backed stablecoins globally, cement the US dollar's dominance in the digital world, and attract billions in capital from institutional investors who've been waiting on the sidelines. But here's the political layer. By owning this bill, Trump is positioning himself as the pro-crypto candidate in the upcoming election, a sharp contrast to regulatory crackdowns seen during the Biden administration. Whether it's campaign strategy or genuine support, one thing's clear. The US is now one House vote away from passing the most important piece of crypto legislation in its history. If the Genius Act gets signed into law, the entire global crypto landscape could change overnight. Story 3. SEC opens comments on XRP and SOL ETFs. The US Securities and Exchange Commission (SEC) has officially opened a public comment period for 2 new crypto ETFs proposed by Franklin Templeton, one tied to XRP and the other to Solana (SOL). These ETFs aim to be listed on the Cboe BZX exchange, the same exchange that handled some of the spot Bitcoin ETF filings earlier this year. While the SEC hasn't given a green light yet, starting the comment process is a critical milestone. It shows these filings are being taken seriously and that we might be closer than ever to a spot XRP or Solana ETF. Now, here's why this matters. A spot ETF would allow mainstream investors to get direct price exposure to these assets through traditional brokerage accounts, without needing a wallet or exchange. That's huge for adoption. But don't pop the champagne just yet. The SEC made it clear that this step doesn't imply any approval. In fact, they're actively asking for public feedback, a move that often precedes delays or legal wrangling. Still, the timing is curious. With recent approvals of Ethereum ETFs, the door seems slightly more open than it was a year ago. And let's not forget, XRP already won a partial legal victory against the SEC in 2023. If anything, that gives this filing a unique advantage. The big question now is, will the SEC finally budge? OT, what do you think? Are we heading into a multi-chain ETF era, or is this just more smoke with no fire? Let us know in the comments. Story 4. Saylor signals major BTC buy amid Israel-Iran tensions. Michael Saylor is doing it again, and he's not waiting for the dust to settle. Just as tensions between Israel and Iran reach a boiling point, Saylor co-founder and executive chairman of Strategy, formerly MicroStrategy, posted a Bitcoin chart with a not-so-subtle signal. Another massive BTC buy is coming. Let that sink in. While most investors are on the edge of their seats waiting to see how the markets react to possible escalation in the Middle East, Saylor is sending the opposite message. Uncertainty is the signal, not the risk. The markets could open in full panic mode Monday, especially after this weekend's developments. Traditionally, geopolitical instability sends capital rushing into safe assets like gold or the US dollar. But for Saylor, the safe haven is Bitcoin, and he's doubling down. His last BTC purchase, just days ago, 1,045 BTC, worth about $110 million, bringing Strategy's total to a jaw-dropping 582,000 Bitcoin. At today's prices, that stash is worth over $61 billion, with more than $20 billion in unrealized gains. That's not a typo, $20 billion in green. And remember, this isn't a crypto hedge fund or a mining company, it's a software firm turned Bitcoin whale. And now, Saylor's hinting at yet another buy even as global risk flares up. Why? Because in his view, every crisis is fuel for the Bitcoin narrative. Governments print money in response to war. Central banks lose credibility. And Bitcoin, with its fixed supply and decentralized nature, becomes the obvious alternative. Here's what this tells you if you're paying attention. Saylor isn't just trading charts, he's playing 4D chess, front-running chaos, and making Bitcoin a corporate treasury strategy on steroids. So here's your question for the comments. If you had Strategy's bankroll and a $20 billion cushion, would you keep stacking sats in this geopolitical storm, or would you wait it out? Let us know what your inner degen says. Story 5. USDC approved as futures collateral. Almost. Now this is a big step for stablecoins and for the future of regulated crypto finance in the US. Coinbase Derivatives, in partnership with Nodal Clear, just announced that USDC Circle's US dollar-backed stablecoin will soon be accepted as collateral for margined futures trading. Let that sink in for a second. We're not talking about offshore or unregulated platforms. This is regulated US derivatives infrastructure, and now they're opening the door to a stablecoin as a primary collateral asset. Here's what we know so far. This would be one of the first fully regulated use cases of a stablecoin like USDC in the US futures market. The process is pending final approval from the Commodity Futures Trading Commission, CFTC, but all indications point to green lights ahead. Coinbase Custody Trust will act as the official custodian, ensuring the stability, transparency, and regulatory compliance of the entire setup. Why does this matter? Because, for years, stablecoins were seen as tools mostly for crypto-native platforms. They were fast, cheap to move, and reliable, but not part of the traditional finance toolkit. This move starts to blur that line. If USDC becomes a recognized collateral asset in regulated US futures trading, it will open the doors for institutional traders to engage in crypto markets without converting back to fiat, enhance liquidity and capital efficiency across both TradFi and DeFi platforms, signal growing trust in tokenized dollars as part of the broader financial system. It also places Coinbase at the center of the infrastructure, not just as a trading venue, but as a custodian, clearinghouse partner, and onboarding ramp between traditional and decentralized finance. This development has the potential to change how margin is managed, how capital is deployed, and ultimately, how both retail and institutional players interact with the crypto derivatives market. In short, stablecoins just got real, and TradFi is taking notice. That wraps up the biggest crypto stories from last week. What do you think, will we finally see XRP or SOL ETFs approved this year? Drop your thoughts in the comments, we'll be watching. If this recap helped you stay in the loop, tap that subscribe button, hit the like, and don't miss the next drop from Degens Journal. Until next time, stay smart, stay sharp, and stay decentralized.